Quantum computing is about to do to technology what the internet did to communication, and most investors have absolutely no idea it's coming. The famed consulting firm McKinsey just put a number on the size of the quantum opportunity, $97 billion by 2035, and then that doubles to $198 billion by 2040. And Morgan Stanley is already flagging the synergy with AI as a massive catalyst. When two of the most respected names in institutional research are pointing the same direction, I pay attention, and that is why I put together this list of the 5 best quantum stocks right now. By the way, I'm Steve Reitmeister. I've been investing for over 40 years. I spent nearly 2 decades as the editor-in-chief at Zacks.com, delivering insights to millions of investors. And now I'm a partner at WallStreetZen.com. That's where I help develop a quantitative rating system to allow investors like you to quickly find the best stocks. I'll be sharing specific stocks with you today, but I'm not giving you personalized investment advice. Always do your own research before buying or selling any stocks. So what is quantum computing and why should you care about it as an investor? Here's the simple version. Your laptop solves problems one step at a time. Quantum computer solves millions of steps simultaneously. We're not just talking about being faster. We're talking about fundamentally different category of machine that blows away our current concept of computing. For years, quantum computing has been the technology that's always like a decade away. But in the past few weeks, the U.S. government signed $2 billion in checks and took equity stakes in 9 American companies to make sure we win the quantum race before China does. And that changes everything about how seriously investors need to take this situation. From an investing standpoint, there are 2 very different ways to play quantum right now. Mixing them up is how many investors get burned. That's why I'm taking a different approach in this video. First, I'm going to share 3 pure play quantum stocks. They have exciting stories and promise revolutionary technology. I'll be real with you though. They are very speculative and the fundamentals are far from rock solid, but they could be fairly soon. I'll tell you exactly what needs to change for them to get upgraded from your watch list to potential buy recommendations in the future. I also want to give you immediately actionable ideas, so I'm going to round out the list with 2 more quantum connected names that are already profitable, already proven, with quantum as a potential upside catalyst on top of their already sparkling businesses. If you like this kind of investing approach, then please hit the like button. It tells me to make more videos like this in the future. Now on to the stock, starting with the most well-known quantum pure play in IonQ with a symbol of OINQ. This company uses trapped ion technology to build some of the most precise quantum computers out there. They have a credibility that most pure plays can only dream about. Real commercial partnerships with the likes of AstraZeneca, ANSYS, and various government agencies. And the revenue story is generally impressive. Last year, revenue grew by over 330%. The stock has been on a serious run, yet Wall Street analysts remain largely bullish with a consensus buy recommendation. In fact, many of the target prices suggest still meaningful upside from current levels. But I'm not pounding the table in this one, at least not yet, and here's why. Because when you dig into the earnings, revenue, and profit margins, the numbers are a bit concerning. As of May 2026, data indicates the company is losing nearly $1.75 for every dollar it brings in. Let's say that again. They're losing $1.7 for every dollar they bring in. Ouch, indeed. The case for caution on IonQ is backed up by the Zen Ratings quant model, which analyzes stocks across 115 different fundamental factors. In this case, it comes in as a lowly D in the bottom 20% of all stocks reviewed. The component grades that shape the overall rating reveal plenty of chinks in the armor, starting with a D grade for financial strength, an F grade for safety, putting in the bottom 5% of all stocks. In fact, they do not have a single component grade in the top 20% of stocks, which is what we generally look for. The point being that this is just a lot of hype, but not a lot of fundamental substance in the stock at this time. So now the question is IonQ a stock worthy of watching? Sure, if the story interests you, but here are some things I'd look for before getting serious about investing in the stock. That revenue growth of 330% needs to hold or to accelerate. One great year doesn't make a trend. The losses of nearly $1.75 per dollar earned need a credible path to narrowing and becoming profitable down the road. Not promises, but a realistic timeline. And the Zen Ratings needs to climb to B or better. This puts in the top 20% of all stocks and greatly improves the odds of future outperformance. Let's move on to quantum pure play number 2 with D-Wave Quantum with a symbol of QBTS. While everyone else in quantum is still racing to build a computer that actually works at scale, D-Wave is already solving real-world problems today. Even better, they already have many paying customers. D-Wave specializes in quantum annealing. That's a purpose-built technique for optimization problems. For example, they might work on solutions for supply chain logistics, financial modeling, or drug discovery. These are problems companies are willing to pay up for to solve right now. In theory, this gives D-Wave a serious head start on commercialization over its rivals. And there are big bucks behind the company. The U.S. Department of Commerce cut D-Wave a massive check. That is to build out its first quantum systems, including a new R&D facility in Boca Raton, Florida, with a roadmap to a 100,000 qubit machine. And yes, 100,000 qubits is a really big deal in the quantum computing world. Wall Street analysts are exceptionally bullish, with a consensus strong buy recommendation, plus some of the fair value price targets suggest over 50% upside potential in the coming years. So why not rush in now with these shares? Because despite the current excitement, the financials simply don't yet reflect that promise. Even the smart money crowd is keeping its distance. Revenue actually shrank significantly last year to only $12 million. And that led to a whopping $370 million loss. Insiders have been selling consistently, including the CEO, across multiple transactions in recent months. And the bearish case is supported by the Zen ratings, where D-Wave gets a bottom-of-the-barrel F grade, which means strong sell. That puts in the bottom 5% of all stocks we review. As we drill down into the component grades, they score in the bottom 20% of all stocks for financial strength, for safety, and for value. Even worse is the bottom 5% showing for our AI factor, which says it is unlikely to be a timely investment. The technology may be legitimate, but the investment case remains highly speculative. However, here are some factors that could turn our frown upside down. First, revenue shrank last year to just about $12 million in sales. It doesn't just need to recover, it needs to accelerate convincingly from these levels in the years ahead. Losses approaching $370 million need to start visibly narrowing. People can stomach some more burn for a while, given the long-term potential, but the only way that continues in the future is by either piling on debt or issuing more shares, which hurts current investors. I'd also like to see the CEO's selling spree stop. And yes, the Zen rating needs to climb to B or better. The current F strong sell is about as red as a flag can get. Before I continue, now would be a good time to subscribe and hit the notification bell. I release videos like this frequently. And taking those quick actions now is the best way to ensure you don't miss my next timely stock picks. Let's move on to what I think is the most compelling of the pure play quantum computing stocks. We are talking about Rigetti Computing with a symbol of RGTI. Here's what sets them apart. Most quantum companies use someone else's hardware. Rigetti builds its own quantum chips from scratch, end to end. Then it delivers access through Rigetti Quantum Cloud Services platform to enterprise, government, and research clients. That full stack approach is a significant competitive differentiator if and only if they can truly execute on it. The stock has nearly doubled over the past year as recording, yet Wall Street analysts foresee some more upside trajectory, with price targets suggesting roughly 50% upside from current levels. A big part of the bullish case for Rigetti is the recent vote of confidence from the Department of Commerce. They are now funding a massive project to help Rigetti solve the hard engineering problems in scaling superconducting quantum computer. This is exactly the same technology IBM is betting $2 billion on with Anduril. Exciting stuff, but looking at the data, there are still some sticking points. Just like our last stock, financials are still a problem, with revenue of only $10 million, leading to a loss of $230 million. Also, with the other pure play stocks, insiders have been consistent sellers as the stock price rallied. But this one perhaps warrants closer monitoring than the other shares. The Zen ratings actually scores this as a hold rather than a sell, which makes it the most investment ready of these three pure plays we looked at today. The growth grade is the most satisfying with a B score. That puts in the top 20% of all stocks for this key component. That is certainly a green shoot that we should pay attention to. Rigetti is the most likely of these three quantum pure plays to graduate from the watch list to portfolio ready. But first, a few things need to change. The revenue of just $10 million needs to grow substantially and consistently. The most recent quarter showed some acceleration, and that needs to continue into the future. Losses approaching $230 million need to narrow considerably. That full stack model is expensive to build. The Zen rating is already a hold with a solid B in growth, the closest of the three to a full-on buy. Getting to A or B overall would be a meaningful signal that it's time to back up the truck on these shares. But considering the fundamentals, all of these pure play quantum stocks remain watch list picks for now. Do you agree? Or are you already buying shares? Please leave a comment and let me know what you think. Now let's talk about some stocks that you may not have to wait on, those mature tech businesses that already have a big toe in the quantum pool. That brings us to the very well-known Alphabet, and you know the symbol. Unlike the lowly rated pure plays, Alphabet comes into the video with a healthier Zen rating of B, which is a buy recommendation. I'll give a bit more of a detailed background in a second, but first, know that the buy recommendation aligns well with the Wall Street analyst consensus of a strong buy, with not a single sell or strong sell among the 33 analysts covering the stock. When the Zen ratings and Wall Street are pointing in the same direction, that's worth paying attention to. The company is a cash-generating machine at scale very few companies in history have ever matched, and they have their tentacles into just about every key technology trend going. This brings us to the quantum angle. Google's Willow chip represents one of the most significant quantum computing breakthroughs announced by any company in recent years. This isn't a startup making promises. This is one of the world's best funded research organizations, and if quantum computing reaches its potential, then Google could be extraordinarily well positioned to benefit. Back to those Zen ratings analysis of the stock. As noted previously, it earns an overall B rating, which is a buy recommendation. This includes impressive component grades such as A for sentiment, B for financial strength, and B also for momentum. That A for sentiment signals analysts, insiders, and institutional investors are increasingly bullish on the stock. Meanwhile, B grades for financials and momentum suggest the company is fundamentally healthy and the stock is already trending in the right direction. Put all together, and this is a powerful setup for continued outperformance. But here's a key point to know about Google here. You're not just buying a quantum computing stock. You are buying one of the most dominant tech businesses ever built, and quantum could be a significant catalyst on top of all that. With the pure plays, we're waiting for them to prove themselves. With Google, the foundation is already set. Quantum could just be another chapter for their growth. By the way, if you like analyzing stock, then here's something you should know. This is exactly the kind of analysis I walk through live every Monday at 7 p.m. Eastern Time. Not just what stocks and industries I'm buying into now, but how I'm finding them so you can do the same. I'm also going to share my hand-picked stock of the week, blending the power found in the Zen Ratings quant model, along with my greater than 40 years of investing experience. All this and more is part of our live training session this coming Monday at 7 p.m. Eastern Time. It's totally free. Just sign up at wallstreetzen.com/live. You'll also find a link in the description or scan the QR code on the screen. Now let's move on to the fifth and final stock, yet another tech behemoth standing to benefit from quantum computing. We are talking about Nvidia. Again, you know the symbol. Are you allowed to make a stock picking video without Nvidia today? I'm scared to find out. But all joking aside, the investment thesis remains strong for Nvidia. Let's start with why the stock belongs in the quantum computing video, because the connection is more powerful than you might realize. Whoever wins the quantum hardware race, they will all need to be going through Nvidia. Period. End of statement. Quantum computers don't operate in isolation. They require massive classical computing infrastructure to control, error correct, and interpret quantum results. Nvidia's GPU platforms and AI infrastructure are likely to sit at the center of that ecosystem. Funny enough, you could call Nvidia a picks and shovels play on quantum. You don't have to bet on which quantum company wins, because Nvidia could potentially benefit regardless, and the underlying business doesn't need quantum to justify the investment. That's because revenue has grown over 70% in the past year, virtually none of that having to do with quantum computing. This is the stock in today's video where you don't have to wait for proof. The proof is already in the numbers. Quantum could simply be the next tailwind behind an already impressive business. Wall Street continues to back these shares even after all the massive gains in hand. Of the 25 analysts covering the stock, not a single sell or strong sell among them, and analyst price targets suggest there could still be meaningful upside from current levels. Most notable is the call from Tristan Guerra of Baird. She is in the top 2% of all analysts based on her stock picking results. She is pounding the table on shares with greater than 100% forecasted upside potential in the year ahead. And yes, the Zen Ratings model confirms this bullish call with an A rating, putting in the top 5% of all stocks analyzed, and the highest rating of any stock we're covering in today's video. The component grades are strong across the board, with Bs for sentiment and value, plus an A for financial strength. The one weak spot is safety, which earns a D, but that mostly reflects the volatility that is inherent in all semiconductor stocks. Nvidia is now one of the most crowded stocks in the market, so even strong earnings can trigger pullbacks if results aren't perfect. At this stage of the AI cycle, continued outperformance will require near flawless execution on their part. But the bottom line is that Nvidia remains a world-class company with elite fundamentals and strong institutional support. So there you have it. 5 stocks in total that are all poised to benefit from the growth of quantum computing. Just remember the first 3 are more speculative names, which I would not consider buying until they make more meaningful improvement in their revenue and profit pictures. For now, it's wise to have them on your watch list. Remember, the Zen ratings are updated daily, so you should put these stocks and all the stocks you like on a free watch list on WallStreetZen.com. This is the best way to be alerted to Zen ratings changes and what Wall Street is saying about your stocks. Now, I want to hear your take on these stocks. Do you prefer the first 3 picks that are a bit more speculative, or playing it safer with Alphabet Nvidia? Just share your thoughts in the comment section below. And if you like this video, then be sure to watch my video featuring 3 little-known robotic stocks with explosive upside potential in the coming year. That's coming on your screen now.